Macy's has been in business since 1858. The company is the largest department store globally, with more than 800 stores across the country. It ranks among the top 5 clothing companies in the country. Even with its success, Macy's might be in trouble. It is shocking, but Macy's has undergone some substantial adjustments that lead us to believe it won't be there for much longer. So, is Macy's closing its doors? Here are several explanations for why we think it might occur, that we have yet to determine. If you are curious to know about Macy's future and what circumstances led to the demise of this famous brand, then this video is for you. Macy's name has come chiefly to represent authentic Americana during its nearly 200-year history of business. Since its modest beginnings as a small dry goods business in New York City, Macy's has invented several elements that make up the modern department store, such as on-site tailoring, dining, and ornate window treatments. Currently, Macy's runs 680 locations in 43 states, Washington DC, Guam, and Puerto Rico, under its own name brand Bloomingdale's, which Macy's also owns along with the e-commerce site Blue Mercury. Macy's wasn't nearly the chain it was now in 1990. 4 companies were department store chains on McKinsey & Company's list of the top 10 US retailers that year. Still, Macy's wasn't one of them. R.H. Macy & Co. is faithful to New York's largest retailer and the operator of about 100 department shops throughout the East, South, and West. But throughout much of the 20th century, the word Macy's conjured images of the nationally televised Thanksgiving Day Parade and the beloved Christmas film Miracle on 34th Street in the minds of many Americans. This was because Macy's was a well-known department store in a well-known city far from home. That changed at the beginning of the 21st century. By making a succession of unlucky choices, Macy's evolved into a major national retailer and the biggest department store in the nation, if not the entire world. Its present situation is uncertain, and activist investors' rhetoric has made matters worse in recent months. These investors want it to split its business into 2, with one Macy's surviving solely online and the other just in physical locations. First, in 2008, Macy's declared localization a key component of its growth strategy and introduced My Macy's, an investment in resources and talent, technology, and marketing that will allow us to ensure that every Macy's store is just right for the customer who shops there. This was done after devoting resources to renovating dozens of hometown department stores in their own image and centralizing their operations. The company then started a remarkable endeavor in 2015 to drastically reduce the fleet of stores. Of course, Amazon wasn't a significant retailer in 1990 either, because it was founded in 1994. E-commerce first made it into the top 10 in 2012 per the McKinsey analysis. It's tempting to link Macy's layoffs to Amazon breaking into the top 10 list of retailers and the expansion of e-commerce in general. After all, the department chain said in 2016 that it would close 100 shops within a year, just weeks after Cohen & Co. analysts stated they were more certain that Amazon would soon surpass Macy's in clothes sales. Macy's increased the number of closures in 2018 as analysts from Coresight Research and other organizations compiled evidence of market share loss to Amazon. Then, in 2020, Macy's announced it will permanently eliminate an additional 125 shops as Amazon expanded its fashion offerings and Coresight discovered it was gaining market share in clothes. That was a component of a transformation effort that was previously suspended but has now been restarted, perhaps with fewer closures. Nick Egalagian, president of retail development firm SiteWorks, mentioned, "Everybody knows that Amazon was growing, so everybody thinks Amazon killed retail. 10 things are going on, but nobody pays attention to the other 9. As a result of Amazon's growth, retailers like Macy's have been compelled to focus more on selling online, reducing the need for as many physical locations. However, it is not the only cause of Macy's declining sales." The president of the retail development company SiteWorks, Nick Egalagian, refers to this fallacy as the real Amazon effect. It's helpful to understand the situation when Macy's decided to grow to track down the actual offenders. The fall itself is not particularly shocking. Macy's has struggled over the past 3 quarters, with comparable sales growth never topping 1%. Additionally, it is coming off a more brutal prior year comparison in which sales increased by 3.1% due to the mini consumer boom. Even yet, the decline's magnitude is unexpected, demonstrating that Macy's is in a poor position as we approach the holiday shopping season and the potentially weaker retail consumer economy that lies ahead. Macy's sales have struggled because the items it sells and the settings in which it does so aren't in line with what customers desire. Although certain attempts have been made to address this, such as the renovation of the menswear section at the company's New York flagship, the addition of concepts like Story to a few stores, and the concentration of Growth 150 shops, these actions pale in comparison to Macy's whole operation. They won't make any significant changes to the situation right away. Outside of the stores, Macy's has made an effort to upgrade. Several other establishments continue to be gloomy, depressing, and boring. They are challenging to use and do not provide the services or deals that today's consumers want. These stores, some of which are in struggling malls, but others in areas that are doing reasonably well, are hurting Macy's. Even a few straightforward cosmetic adjustments would be beneficial. Still, Macy's appears to be powerless to take any action to revive its estate. Additionally, even the best retailers fall short of their promise because of the inconsistent quality of their inventory. Like Target, Macy's should have spent the last few years creating attractive own-brand assortments in the fashion, home, and beauty categories. This would have improved profits and helped Macy's stand apart. Macy's continues to trade with a jumble of products, some of which are good. Still, many of these need to fit customer demand, showing that minimal meaningful effort has been made. This mismatch is one of the causes of the significant discounting, which have been a detrimental effect on margins and the bottom line. While the current statistics are dismal, the bigger worry is that they show Macy's is preparing for any possible slowdown in consumer spending. The trading environment was a touch weaker this quarter. However, Target, Walmart, and other companies have demonstrated that it's still possible to secure growth despite that. This highlights that, as competition heats up, those who execute well will win more, and those who lack persuasive arguments lose out. The latter group includes Macy's, and in 2023 we anticipate a lot more consumer loss. Sales of clothing were robust in the 1980s, unlike today. Cohen of Columbia University claims that Macy's did not consider the whims of the retail industry. They were getting rid of businesses like electronics and home elements, whose gross margins or gross margin return on investment didn't look great, Cohen said. They were feasting on the boom in apparel and accessories that was going on, without regard to the fact that, like anything else, those things cycle up and down. But at that moment, it looked like a great way to prop themselves up without considering what it would mean for the future. Since beginning its ambitious natural build-out more than 26 years ago, Macy's has succeeded in making itself a national store, but one that's a little more understated than it may have anticipated. The corporation now operates a total of 160 Bluemercury spas, 54 Bloomingdale stores, and 512 Macy's stores. In its most recent quarter, 32% of its sales were made online. According to analytics firm App Science's analysis of in-store shopping trends, Macy's maintains a sizable customer base across the nation, ranking 5th in the West, 8th in the Northeast and South, and 10th in the Midwest. The department store's former budget rivals Walmart and Target outperformed Macy's. However, according to UBS analysts, Macy's is unlikely to alter the dynamics that over the past 10 years have resulted in the loss of a quarter of its market share, primarily to off-price shops, brands, and Amazon, which continuously outperformed it in terms of price, product, and service. In fact, it's hard to find an observer who thinks Macy's has a strategy for a world in which the department store needs to be updated. According to Siteworks' Egolanian, they think their big enemy is the internet, and it's not, he said. Their stores are old and tired, the malls they're in are dying, and the merchandise they sell is ordinary and overpriced. Macy's is doing a commendable job of fighting amid challenging conditions. It might learn how to compete with formidable e-commerce rivals like Amazon and lessen the epidemic's effects if it can buy enough time. But the majority of investors are beginning to realise this. Likely, Macy's will only exist in its current shape for 5 years as we know and love it. Make sure to let us know your thoughts down below. Subscribe to the channel as a sacrifice to the gods of the algorithm. Thanks for watching.